The strategies and concepts discussed are for educational purposes only and do not represent specific investment, tax, or estate planning advice. Investing carries an inherent element of risk, and it is possible to lose principal and interest when investing in securities. No strategy can guarantee a profit or prevent a loss. The views expressed represent the personal opinions of the presenter or featured guests, not necessarily those of USA Financial or its affiliated subsidiaries. Any opinions or forecasting statements are subject to change at any time and without notice. John Cyndia is an investment advisor representative of, and advisory services are offered through USA Financial Securities Corporation, member FINRA SIPC, a registered investment advisor. Life Stages Advisory is not affiliated with USA Financial Securities. Life Stages Advisory, Dean or Remington, or any guest we have are not affiliated with USA Financial Securities. Welcome to episode 75 of WTF, Wealth, Tax, and Finances. I'm your host, John Cyndia, certified public accountant and personal financial specialist. I have Dean and Remington in the studio again today.
Hello.
Good afternoon.
From our last episode, we had a segue coming in talking about short-term trading versus long-term investing. What's the difference? Why should we care? And how are you going to handle it one way or the other? And how do you know which one you should be doing? Right, Dean? We're going to start off with a question Dean had right away.
I would say that's about right.
Yeah.
So I think we're in an environment where short-term investing, I don't even know if I'd call it trading. I guess you could call it trading, has become like the big norm.
It's the hot topic.
The hot topic. Everybody's in.
The big
You
thing.
go to the grocery store and a 16-year-old behind the counter tells you, oh, he has $10,000 in that newest meme stock.
Oh, yeah.
And you're like, please stop talking.
I just want my groceries.
This is the third time I heard this today. Do you work at the gas station down the street too? Because this guy said the same thing. So I think really just out of curiosity, just because our environment has become so norm to the short-term investing, and I think a lot of people are familiar with it, what we've kind of shied away from is the long-term investing.
Mm-hmm.
So I'm kind of curious, just me being a little bit younger, I haven't had a whole lot of opportunity to, build up long-term investment strategies and really understand how they work. So I was kind of curious, like if you decide like your singular blue chip stock is a good investment that you want to put in long-term, you want to put $50 in a paycheck and you just let that thing ride, how long? So I'm curious, like at what point during a course of a long-term investment does your strategy change? Do you put more money in? Is it depend on like PR events? Like at what point do you make changes in that long-term investment?
Well, I think first of all, we got to discern between investing and speculation and trading. Okay. A lot of what's going on right now is just pure speculation. When you're looking at companies that are pretty much worthless and all of a sudden they go up 400 points or $400 a share, and then they turn around and have another IPO for $1.5 billion or $5 billion or whatever they had lately, to a company that's basically should have been gone bankrupt already. That's pure speculation. And it's a dangerous game. Some people are going to get played. Some of them are going to make a bunch of money. But, that's sort of a no-win situation for the majority of the people. So we're not going to talk about speculation. From a trading standpoint, whether you're trading stocks short-term, you're looking at options, something like that. Options, you can go out for a year and a half, 2 years with what they call leaps. So, you're putting on a trade that is going to happen, but it's for a longer period of time. Not just millennials, but certainly for the most part, millennials are into, the online brokerage, discount brokerages and stuff. And they're looking to get into something like the meme stocks, but then they want to get out of them too. So, they're trading on speculation.
Yeah, everybody wants to be an overnight millionaire.
Exactly. So that's short term. When you're trading, you're buying, you're selling, you're trying to get a quick fix, you're trying to get a quick hit on something, thinking you're going to buy in at 10 and get out at 100, or it goes, it probably goes down to 5 more times than it does go up to 100. Once you end up doing that, you've got to really understand, like what we talked about before on the options with the Greeks and everything. You have to understand how the options move, If you're into stocks, you're going to have to look at it. Is it a cyclical type stock? Is it a long-term play? Is it a mature company? Is it a new company? Is it a tech company? What are you looking at in there? So you really have to get down your investment philosophy or your investment plan and say, what is it I want to do? If you want to get into short-term trading and that's all you're going to do, that's fine, as long as you know what you're doing. If you're looking to build a core investment portfolio and have things like blue chips that are paying dividends and stuff for the long term, that's something you want to put in $50 or $100 a pay or whatever you were talking about from a dollar cost averaging standpoint. We've had clients that have had stocks since the 60s and they never got rid of them. But their portfolios, they've had these things. They're in the millions.
Yeah.
They're in the millions. So it's like, how long do you hang on to them? Yeah, you could hang on to some of these things forever. There's other ones that are going to turn around and go bankrupt and, whatever from that standpoint. So that's a moot point. It handled itself, okay? But when you're looking at this, you can read all kinds of articles, and somebody's going to say a long-term play is 2 weeks. Well, that's, it's not.
Right.
It's still a trade. I'm looking at anything that, if you've got something that you're planning on getting in and out of within 6 months to a year, I'm looking at that as more of a trade. Or, you may want to take advantage of a cyclical move in a stock or something like that. So, if you're watching certain stocks, you get a handful or you get a dozen or two, and you see how they trade over a period of years, that, you can look at when the earnings come out every quarter. And you'll hear a lot of these pundits and talk about, quarterly earnings, well, you got this play, you got that play or whatever. Certain stocks either go up or down. Some of them will retrace right before earnings announcement, and then afterwards they'll go up. So if you can follow these and trade that, there's nothing wrong with that if you know what you're doing. But for sustainability and doing something like that, that's a totally different move. That's just trading. If you're looking at it from a perspective of investing, you're probably going to want to hang on to some things for at least, 2 to 5 years, maybe 10 years in some cases. You might have a value play that it was a growth stock shot up and all of a sudden it pulled back 50% or whatever. You go into it thinking, that it's a cheap valuation and it's still a good stock. But, for whatever reason, it may have been, it's an older, more mature company. It did what it could do. And now all of a sudden people are going somewhere else for something that would have more growth in it. It could still be a good stock. Now, is it paying a dividend? If it's a value play, you might have to hang on to it for a long time till it gets back up anywhere close to what it was before it pulled back. So there's just a lot of different things that you have to look at. And, you're going to have to read on some books and stuff and just look at trading versus investing and seeing what fits you. Because, if you're conservative, you're not going to want to do certain things. If you're more speculative and you're more risky, you can take on all kinds of risk, do all kinds of stupid stuff. You can be a contrarian investor. Somebody said, hey, you got 10 or 15 economists are saying, the economy is going to go crazy and all the stock market should go up, and you trade totally against it and short it. They're saying it's going down. You turn around and buy long. You can play it any way you want to, as long as you put the time in to understand exactly what that is that you're wanting to do and play with. But I think if you're trying to build something long term, you're younger and stuff, just doing any type of dollar cost averaging, whether you start with some mutual funds to start with, or you get a decent amount of stock and do a DRIP or a dividend reinvestment plan, if it's paying a dividend, just keep that thing going for several years. You'll know along that point in time if it's stagnant and not doing much. You're going to have stocks that are stuck in a trading range. They might trade from 35 to 50 and never go anywhere. Well, if you play the cycle, you could buy them at 35, trade them at 50, sell them, and wait till they pull back again. But from a long-term growth perspective, they may not split anymore. They may not grow any past the 50. You may not want to deal with that anymore. So you look at something else. And there's always a rotation in the sectors, whether you're in real estate or your tech sector or household goods or, state consumer staples, construction, anything like that, industrials. Everything's going to have energy. You're going to have different, not only cycles, but, like you were saying, is there certain economic event or something in, whether it's in the economy or somewhere that's happening? And I would say, yes to all of that, because right now, where are we? We're still getting tops in the market every day or every couple of days. The market's going higher and higher. I think what it is, there's still cash on the sidelines. We've got all these trillions of dollars that are trying to go somewhere from all the stimulus payments. They're going to stop at some point here. All of the unemployment benefits are going to end sometime around August or September. Okay? That's going to be a big tail of the tape right there, because once that happens, the people have been getting a lot of free rides and just staying home and, not doing anything. If they've been utilizing that money, I think, a lot of them are, just trying to hang on, but there are people that are just going to spend that. There's been millions. We've seen it with, whether it's been on the news or clients or stuff, that through the economic stimulus, people are getting money. I mean, a big dollars. And I'm just amazed at, what they were able to do, how they were able to get it. And, me being a CPA and having to watch out for everything that's, licensing, people are doing things that I wouldn't have done. I didn't do, and I couldn't do. But, to think about it's like, geez, I know how they function.
I can do whatever I want to get more money.
And they're getting hundreds of thousands of dollars, millions in some cases. And it's just like, my God, they're going to have all these things on the PPP request and have them all, forgiven.
Yeah. So, I've heard of people like saying, like, I'm going to build a new pool.
Mm-hmm.
You're going to build an in-ground pool with that loan. Okay. Doesn't know how that has to do with your business, but
well, exactly. And as long as some of them going to lie, probably.
Yeah.
There was already how many of these people have been put in with tens of millions of dollars that was defrauded from the government through the plan that they've already caught. And the last episode we talked about the IRS being so short-staffed. You're not going to end up having anybody auditing this stuff. They're not going to have a clue.
Who's going to do it?
This was just a big, multi-billion-dollar boondoggle for a money grab. And, we're going to be left with the price tag at some point, once all this stuff shakes out. So, is the economy coming back? People out there spending since COVID's over with. They're going back to restaurants. They're starting to fly. They're traveling. They're doing all kinds of stuff. The 4th of July weekend, they're expecting back to record crowds that happened in 2019 before the COVID pandemic hit. So I think there's going to be a huge influx of cash to the economy through spending of these, the economic incentive plans. Once that's done and people are going to realize, they got to get back to work. One thing I saw the other day, which made no sense to me, the jobs, people filing for unemployment dropped, but the unemployment rate increased. Now, I couldn't wrap my head around that. I still can't. They were expecting 800,000 to file, 700,000 filed, but it went from 5.6 to 5.9% unemployment. I didn't dig into it or anything, but you got one number going one direction, the other one going the opposite, and it just doesn't make a whole lot of sense. And the people staying at home, not working, there's still millions of jobs out there. You drive down the street, we down over around Belden Village, and we see things. Every restaurant has help wanted signs.
Oh, I saw a few the other night, yeah.
Every business you go to,
people don't have to work now.
Exactly. They don't want to work.
Right.
They don't want to work because they're getting paid more to stay home. So, that's a true statement. So, what's going to happen? Then you had this huge amount of people in April that just walked away from their jobs and saying, I quit. I'm going to find something else.
Right.
Well, they haven't found anything yet. Whether they're looking or not, it's a different story. But are they going to find anything? And there's still, 9, 10, 12 million jobs that are out there that have left. And are they in the industries that are going to be coming back anyway? So many restaurants closed, yet the ones that are still open can't find anybody to come back to work.
Right.
So, and then you've got other, home goods stores, things like that people working, double, triple shifts, working 7, 8 days a week, 10 days a week, 9 days a week.
To keep the dang place open.
Yeah, to keep everything open, So you're looking at it and going, what in the world's going on here? So everything is, in pretty much of a chaotic mood yet at this point. And I think, I've been talking about the correction. This reminds me of what happened back in, 07, 08 when we had the collapse of the stock market and everything. Yeah, the housing and the stock market, because the housing market at that point, because I had thought, the housing market was going on a tear from 2000 all the way to 2007, 8 when that hit. And I kept going, what's going on here? This, I was calling this in 2002, 2003. What I didn't realize or didn't think about until after it hit was the fact that the housing prices were going up so fast and so much that the people ended up kept using the house as a piggy bank. So they would go and refinance, take money out again. So they'd have a $200,000 house, it's worth $250,000. They'd get an equity line and take 20, 30 grand out. Now it's worth $300,000. They take another 20 to 40,000 out. They'd refinance for an equity line. They'd go up to 350,000. So, that's where the money was coming from everybody refinancing. And I've had, clients and people that had refinanced over a period of anywhere from 2 to 5 years. They refinanced 3, 4 times. Well, that was their bank. So that kept the whole process moving, and it was artificially inflated. So everybody was sitting there out, they were doing the same things now, outbidding each other for properties and stuff, and everything collapsed. So I think we're into a similar situation with a stock market, that we've got all this artificial money that's out there, and it's got to go somewhere. So it's going to look to go into the stock market. It's going to go buy in all these other things. Those NFTs are already on the way out. These non-fungible tokens, that was a blip on the screen, and stupid people ended up paying dumb money for stuff, and so the NFTs, and what was the other thing? There was something else that was out there too, that just sort
crypto.
Well, that's sort of on a stall right now. I think it's still going to be here, but I don't know. Are you going to be able to make money on stuff?
Yeah, we had the NFTs. I mean, a lot of the really bad meme stocks. They're hopefully phasing out, because a lot of people are starting to realize that I wouldn't even say meme stocks. I'd say the influencer stocks are hopefully phasing out, because people are realizing, hey, the guy that I watch on YouTube that doesn't know me at all, that told me, hey, you can get rich, might be trying to scam me and steal my money.
Yeah, think?
He's trying to get everybody to buy.
See, the thing is that there's only so many people are going to be putting their money into that. And it's getting long in the tooth now, and there's no new money on the sidelines. If they're in it, or they wanted to be, they're in it. So now that they're in there, the momentum's going to stop. That's why there's going to be a reversal on all this stuff at some point here. It has to be, because it's not worth anything. It's probably worth more like $5, $10, $15 like it was before all this stuff started. Probably worth less than that. I think the top 3 or 4, maybe 5 of them should all be bankrupt anyway. There's no real intrinsic value or real value there. They got rid of the brick and mortar stores, and now it's all online internet stuff. But I think it's, it's past their bedtime at this point.
Yeah, put them to sleep.
Yeah, it's like, hey, But, so we're talking about trading. We're talking about long-term investing in that. So I think, you got to determine what that plan is first, and then look to see what you're comfortable with in doing that. And I don't think there's any real right answer to how long do I hang on to this stock? 2 weeks, 10 weeks, whatever. If you're trading, like with options or with stocks or whatever you have, you're trying to leverage the option side, then yeah, that is a trade. And it could be anywhere from a week to several weeks to several months or a year or more. It just depends on, what your philosophy in your trade is. And then are you looking to pull out? I mean, some people say, well, if I get 20 to 25%, I'm getting out. Well, how would you have felt when you got the first 20, 25% on Microsoft, 20 years ago, and it's up where it's at? Same thing with some Amazon and some of these other stocks that took off. When you start looking at certain things like that, yeah, those are long-term plays. Those are solid types of stocks. Something, that is in there looking for long-term dividends, something like that. If you're getting into something that's like those non-fungible tokens that they were talking about, somebody buys something for $69 million. Well, that's one of those one-offs that we're talking about before. If they get in on the speculation of these things, somebody's going to make a lot of money.
Yeah, I'm looking at it now. The price on a lot of these has dropped significantly. You had the ridiculously expensive ones, and now seeing one pop up over $1 million is super rare. Like Jay-Z just sold one and only brought in like 130,000. It's still a lot of money, but like compared to where they were like a month or two ago.
Jay-Z's a billionaire. What the hell is he going to do with $130,000?
Right.
Nothing.
Not
pay off his entourage for a week.
Yeah, a week. Geez, he couldn't even get him through for an 8-hour shift, I think, on that. So that's, everything is just so stupid anymore that everything's got to get back. There's going to be a reversion to the mean, I guess, is what we're looking at, because we're so far over the what do you want to say? The influencers, everybody just hyping one another, talking things up, just trying to get one up on the next person, and thinking that they're going to be able to do it, through social media, and it's all there, and it's something we have to look at. Are there going to be influences on that? Sure. Is there going to be other meme stocks? Probably.
Oh yeah.
From that standpoint. But at some point, they're going to run their course, and when they do, there'll be something else that comes up. What's that going to be? Who knows? So you just have to be diversified, allocate your portfolio and everything, and I'd look at having 8 to 10, maybe 15 different sectors or types of investments, and put, 5 to 7, maybe 10% into each of those different types of investments, and then look at it from whether or not you're going to be in there short term or long term with whatever it is. After you've had, your savings in there for your safety net, then after that, as you get into it, you'll just sort of feel your way through it and say, yeah, I like this better, or I'm being more successful doing this than that. It's going to get boring doing long-term stuff, trying to look out 20, 30 years, but that's the stuff you got to put on the shelf, don't even look at. That's that dollar cost averaging, $50, $100 a pay, doing that.
Well, that's the stuff that's the stuff that'll make you the real money too.
Exactly.
Which is over time going to be much more successful than, not saying that people who trade are unsuccessful, but I just, in my eyes, think that, you're a lot better off, and it's a lot less involved if you're just going to long-term invest.
You're making money overnight. The compounding effect's going to work for you.
Right.
The reinvestment side of it. That's why some of the some mutual funds that'll have dividends paid out, or if you've got enough money that you can start buying stocks and doing that, you just add to it. Once you get a round lot of 100 shares or something, then you can let that drip plan, that reinvestment, just keep earning more. So anyway,
very good information.
You think it was good?
Oh,
okay.
Yeah.
Cool.
Yeah.
Well, drum roll. Am I gonna do this? Okay.
Wait.
How do you get a hold of us?
Oh, actually, he might be.
I'm trying.
Okay, he's got this. I'm not gonna say anything.
All right. How do you get a hold of us? Glad I asked myself. jcindia at lifestagesadvisory.com. I've heard of that before. Okay. YouTube. Like us, love us, subscribe. Yes. And then what are those areas that you can find us on? Spotify?
Yeah.
Apple?
Yeah.
What's the other one? iHeartRadio. Yes, that's it. Okay.
Gosh, we need like a teleprompter or something. I thought we'd get it by now.
Hey, it's my shtick. What can I say, you know? Anyway, thanks again, guys. Good seeing you. Until next time. Bye.